Hi, my name is Jogerst and I'm with Alchemy Trading Technologies. In this presentation, I would like to introduce our Alchemy TrendCatcher System, which is one of our most popular indicator package for identifying the trend and finding good entry as well as exit points. First of all, I would like to say thanks to AM Futures for the opportunity to demonstrate our Alchemy TrendCatcher System. Let me briefly introduce myself. I'm the founder of Alchemy Trading Technologies, and I created our Trading Alchemy indicators, which are available on the multi-charts platform as built-in add-on studies. I started trading in the mid-90s, and at the very beginning of my trading career, I studied with many professional traders. After becoming skilled with a wide variety of trading methods, I started developing my own trading style by combining the components of the methodologies that work best for my own personal trading approach with new techniques that I developed over the years. I've been developing indicators and strategies for over 18 years, and in 2001 I founded Alchemy Trading Technologies. Our company is built on the model of offering indicators that we find useful and profitable in our own trading. Since then, our line of Trading Alchemy indicators have been used by many traders worldwide, and we've been collaborating with multi-charts since 2006. Before I get started, I need to go over some important disclaimers. There's a substantial risk of loss in trading futures, and past performance is not necessarily indicative of future results. This presentation is for educational purposes only, and it is not intended as investment advice. The use of information from this presentation is done at your own risk. In this presentation, I would like to show you how our Alchemy TrendCatcher indicator identifies a trend, how we use this indicator to enter the market at low risk entry points, and how we can ride a trending market with this indicator. First, I'm going to pull up a blank chart in multi-charts and insert our Alchemy TrendCatcher indicator, which is one of our add-on studies in multi-charts. Our Alchemy TrendCatcher indicator contains two separate trend modules, a trend direction module and a strong trend module. Right here we're seeing just the trend direction module, which identifies the trend direction based on a proprietary trend calculation that we developed. When the trend is up, the price bars are painted in a dark cyan color. And when the trend is down, the price bars are painted in a dark magenta color. These cyan dots represent a bullish trailing stop, and once the market breaks through this trailing stop, the trend changes to the downside and a bearish trailing stop is displayed above the market. This trend direction trailing stop is an excellent tool for staying with the trend for longer moves, and at the same time it gives us a good initial stop for minimizing our maximum risk, but at the same time giving it enough room to not get stopped out before the market takes off. Additionally to the trend direction module, this indicator contains a strong trend module, which acts as a strong trend detector that signals the strength of a developing trend and increases the reliability of a follow-through of a previous reversal or breakout. This strong trend module is made up of two separate components, and let me show you the first one by enabling the strong trend paint bars. When a strong trend is detected, the indicator color codes the price bars with a thicker cyan color. The very first colored paint bar of each new up move could signal an aggressive long entry. Rather than entering long at the trend direction reversal, waiting for a strong trend confirmation instead delays the entry, and it may cause a higher entry price, but it filters out quite a few false reversals, and this pays off in the long run. This type of signal is considered a breakout entry, and a more conservative trading approach would be to wait for the first pullback. This is where the second component of our strong trend module comes in, so let's take a look at it. I'm going to enable the strong trend entry zone and the strong trend paint bars. With the strong trend entry enabled, as soon as a strong trend is detected, the indicator displays an entry zone below the current market at a logical retracement area, which provides a much better entry price into the direction of the new trend. The closest dot would be a more aggressive retracement entry, and the furthest dot would be a more conservative entry. When the market retraces back into this entry zone, the portion of the price bar that is within this entry zone is painted green. For determining at which level within this entry zone to enter long, we have some additional indicators, but for now I will use the closest entry level right here to go long. Once in a long position, our trend direction trailing stop does a great job keeping us in the market for the bigger moves. When we first enter, we can initially use it as a protective stop, which would be right here. And we can keep moving our stop up as the trend direction stop moves higher. And at this point, the market breaks through the trend direction stop and we would get stopped out. When trading full in, full out, this would be the approach to take for trading the system in order to ride a trend. However, when the market is not trending, it may give us some profits and then turn around to then stop us out, either break even or at a loss. This is where a smart exit plan comes in. Typically, when our position profit equals our initial risk, we don't want to turn a trade into a loser anymore, and we always look at points in the market where we can scale out to take some profits while staying in the market with a portion of our positions for the long run. When there's a strong trend, we even find new opportunities to scale back in. Let me demonstrate a scaling in, scaling out method that in our experience works very well in conjunction with our TrendCatcher system. For profit taking, we look at the retest of the previous high, which can be viewed quite easily with one of our other indicators, the market price trend indicator. So let me insert it into this chart. Now we can see the swing highs moving up and the retracement pivots, which are the lowest retracement lows in between swing highs in an uptrend. So let's go back to our long entry at the first strong trend buy zone. And here is my initial trend direction stop. In this case, since the retracement pivot is a tad higher, we like to place our stop there. If the market breaks through the retracement pivot stop, the trend has changed and we don't want to be long anymore. So if the retracement pivot is above the trend direction stop, we can use the retracement pivot as our stop instead, which at times helps us to tighten our stops a tad, like here and there. Our first profit target is always the previous swing high right here. However, we do want to see a minimum of a 1-to-1 ratio between our initial risk and our first profit target. So, using multi-charts trend-based price extension lines, I connect the stop price with the entry point as a 100% distance and display the 200% extension of this distance to make sure that our first profit target at the previous swing high measures at least this distance, which in this case, it just comes in. If we take off half of our positions at this point, and the market comes back down to our stop, at least we're breaking even with this trade. So here's the exit of the first half of our position. When the retracement pivot moves up, our stop is now at break even, and the second half of our position is now a free trade. We can now relax and let the market run without any anxiety. As the market pulls back into a new strong trend buy zone, we could add on to our position and scale in right here. Then we can take off half of our positions again at the retest of the previous swing high right here. As the market moves higher, we can trail our stop with a trend direction or retracement pivot stop, whichever is higher. Here the market pulls back into a third strong trend buy zone for a new opportunity to add on new long positions and take off half of our positions again at the retest of the previous swing high right here. Then we can keep trailing our stop higher, add on at the fourth strong trend buy zone, take off half of our positions at the retest of the previous swing high, keep trailing our stop higher, add on again at the fifth strong trend buy zone, and take off half of our positions at the retest of the last swing high. When the market breaks through the trend direction stop, we exit all of our remaining positions right here. The second half of the last add-on position was a loss, but otherwise not bad. Since with each consecutive pullback, typically the odds decrease that the market will continue the resumption of its trend, we like to weigh the number of add-on positions so that we enter with a larger percentage of our maximum allotted position size at the initial entry and decrease this number of add-on positions with each consecutive entry. There are all sorts of money management models for this type of scaling in, scaling out method, but here's a model that has been consistently working for us. For simplicity purpose, let's say that we can trade 100 contracts so that 100% would be interchangeable with 100 contracts. So we enter with 100 contracts at our initial entry and scale out with 50 contracts at the first profit target. Then at the next add-on point, we increase our position size to a net of 90 contracts. So we scale back in with an additional 40 contracts and scale back out with half of our positions at the next profit target. So we're at a net of 45 contracts. We basically repeat this model at each consecutive add-on point. So we increase our position size to a net of 80 contracts and scale out with half at the next profit target. Then we increase to a net of 70 contracts and scale out with half again. At our last add-on point, we then end up with a position size of 60 contracts, which leaves us with 30 contracts at the last scale out point, which we then exit when the market breaks through our stop. So with our last add-on, we didn't lose nearly as much because we were in with only 60 instead of 100 contracts. So essentially, we decrease our maximum allotted position size by 10% on each consecutive add-on and always scale out half of our position to the next profit target. If our maximum allotted position size is too small for scaling in and scaling out at these consecutive pullbacks like this, we could simply exit 50% at the first profit target and hold our remaining 50% until we get stopped out with a trend direction stop like this. If you're more of a scalper mentality and you want to quickly get in and out, you can enter at each pullback and exit at the retest of the previous high like this. So the system is pretty flexible and you can customize it to your own trading approach, comfort level, and trading capital. Okay, then let me quickly demonstrate this on a bearish example. This time I will use a candlestick chart, and here are the dark magenta paint bars indicating the bearish trend direction. The magenta dots are trailing the market down right here. Now let's enable the strong trend paint bars of the TrendCatcher indicator. Here are our bearish strong trend paint bars, where we could short the market on a breakdown if you didn't want to wait for a pullback. Now let's enable the strong trend entry. And here are our retracement entries. Then here are the retests of the previous lows for profit taking. The trend direction and retracement pivots are trailing our stop down. And all of our remaining positions are stopped out when the market breaks through our stop right there. Okay, next I would like to discuss the primary techniques that we use for timing the retracement entries. So back to our previous bullish chart with the market price trend and TrendCatcher indicators applied. And here are our entry zones that the market retraced back into. As I mentioned before, there's always somewhat of a distance between the closest and furthest entry dots. And waiting too long for the market to retrace deeper into these entry zones could make the difference between getting into a trade or missing it, because the market starts turning around and then takes off. If this does happen, we don't like to chase the market, but rather wait for the next pullback. If the market retests the previous swing high and then reverses as it happened on this last leg right here, a late entry above the entry zone would most certainly result in a losing trade. So to better time the entries in these entry zones, we like to use a faster time frame by tabbing down, typically 1/3 to 1/5. And here are some examples of various time frame combinations. If our trading chart was a daily interval, we would tab down to a 120-minute interval. If our trading chart was a 60-minute interval, we would tap down to a 15-minute. On a 30-minute interval, we would tap down to a 10-minute. On a 5-minute, we would tap down to a 1-minute. On a 300 tick, we would tap down to a 100 tick. So here are the corresponding entry zones on both charts. For signaling a momentum change that tells us when the market is getting ready to resume its trend, we developed our Alchemy overbought oversold indicator, which is also part of multi-charts add-on studies. This indicator is designed to signal overbought oversold conditions that occur simultaneously on two oscillators. This basically tells us when the momentum might be changing and for price to move into the opposite direction. The magenta dots signal when the momentum is changing to the downside, and the cyan dots signal when the momentum is changing to the upside. On this chart we see a lot of overbought and oversold signals here, but in this case we're only interested in the oversold signals when price retraces back down into our buy zone. With this method we pick very good turning points. So here are our strong trend buy zones. When price enters a strong trend buy zone, we wait for an oversold signal on our faster time frame chart. So here is where the market comes down into the strong trend buy zone with the corresponding oversold signals. Using our oversold signals don't always give us the absolutely lowest entry, but it gives us the advantage of getting into the market before it starts taking off. Okay, let's go to our bearish example to see what this looks like. Here is when the market entered the strong trend sell zones and when the overbought signals are triggered. When price enters the strong trend entry zone, retracement entries are always very difficult because we're entering against the current price move. We're going long as the market is coming down, and we're going short as the market is moving up. The overbought, oversold signals give us a green light that the momentum is changing, and they give us the confidence that we're entering into the right direction of the market move. Okay, next I would like to talk about recognizing warning signs of a market reversal and briefly go over a technique for confirming that the trend might be exhausting and maybe nearing a reversal. One of our favorite techniques is using oscillator divergence. When an oscillator moves into the opposite direction of the market, we refer to this as divergence. The way we use divergence when we're in a trend trade is by looking for warning signals to not scale back in, tighten up our stops, or perhaps exit all of our positions. When looking at a lot of charts at the same time, it gets hard to spot all of the divergences, and in order to not miss divergence signals that might play a big role in our decision making, we developed our ultimate divergence indicator. With this indicator, we can select just about any oscillator or even a second data series if you want to look for divergence between the instrument that we're trading and another market that may give us a leading market reversal indication, such as the New York Stock Exchange tick. So let me show you how we use this indicator on a couple of chart examples. This is another indicator in the multi-charts list of add-on studies. On this chart, we're setting our ultimate divergence indicator to display RSI divergence, which is one of our favorite oscillator for divergence signals. The cyan show me dots below the price bars show when there's bullish RSI divergence, and they're connected to the previous pivots that the divergence is measured from with trend lines. This makes it very visual to spot the divergence. In the lower subgraph, we inserted our ultimate divergence indicator so that it displays the actual RSI oscillator with the corresponding divergence dots. In this chart example, we're getting just one bullish RSI divergence signal right at the end of the very last leg when the market retests the previous low. As you can see on the RSI line, the second RSI trough is quite a bit higher, showing the strength of this divergence. Such an extreme difference between the two RSI points make for a pretty strong divergence signal, and this shows that displaying the oscillator in the lower subgraph does give you the advantage of being able to determine the divergence strength. This is especially important when a decision on entering or exiting the market depends on this divergence signal. So let me show you on this chart example on how we use this divergence signal to our advantage. Once again, here are our retracement entries. Here are the retests of the previous lows for profit taking. And here is where all of our positions are getting stopped out with the RSI, with the retracement pivot stop. When we saw the RSI divergence signal right at the retest of the previous swing low, we might have considered exiting all of our positions, or at least tightening up our stop to lock in some profits on this last short entry. Something like 50% between the last short entry and the previous profit target. So by tightening up our stop like this, here are our new exits, which gave us quite a bit more profits on our remaining positions. So let me show you two more chart examples. This is the very classic bullish example. Here are the strong trend buy zones with their corresponding oversold signals. On this chart, we also added a second ultimate divergence indicator that displays MACD divergence. And here we're getting bearish MACD and RSI divergence on the last couple of swing highs to give us a warning signal of an upcoming market reversal. Once again, we would have been able to exit at a much better price using the same technique of tightening up our stop on the last entry before our retracement pivot stop would have taken us out. Okay, this is my last example, and here are the strong trend sell zones with their corresponding overbought signals. On this chart, we added even a third ultimate divergence indicator that displays stochastic divergence. And here we get bullish MACD stochastic and RSI divergence on the last couple of swing lows to give us a warning signal of the upcoming market reversal. Tightening up our stop on the last entry once again would have given us a better exit point before a retracement pivot stop would have taken us out. Okay, this shows how to use our Alchemy TrendCatcher system. It is easy to use. It is a very simple trend trading system, yet it is very effective and powerful. It is directly integrated into multi-charts as add-on studies, all for a one-time purchase price of $499.95 for our TrendCatcher indicator, $399.95 for our ultimate divergence indicator, $199.95 for our overbought oversold indicator, or you get $100 off if you purchase all three indicators for a discounted price of $999.95. So here's our contact information, such as URL, phone number, and email address. The direct order link for our TrendCatcher indicators, which is tradingalchemy.com/TrendCatcher, and also the link to our complete products catalog. Please don't hesitate to contact us for any questions on our TrendCatcher system or on any of our other products. I hope that you enjoyed my presentation, and thanks again to AM Futures for this opportunity.